presented. This webinar will be presented by business leaders from both Hietch Berhad and C2L BIZ Solution, respectively. We will showcase to you on the latest innovation, trends, and challenges in Insurtech, as well as manage cloud services to fortify your business resiliency to ensure greater growth whilst navigating these unprecedented times. Just a little logistics and housekeeping before we get started. For the best audio experience, all attendees will be muted for the entire session. If you have any questions, feel free to type them into the question box in your control panel. We will bring them up at certain points during the presentation. We will also have time for Q&A session, as well as a quick questionnaire to be filled up at the end of the session later. Without further ado, we will turn the time over to our first presenter, Mr. Mangesh Vaitla. He is the co-founder and executive director of C2L BIZ Solution. Without further ado, once again, Mr. Vaitla, the floor is yours.
Thank you, Shafiq, for a kind introduction. And I hope you are able to see my screen clearly and I'm audible clearly.
Of course you are. Go ahead.
Thank you. Thanks a lot. Yeah, so I'll just make it into a presentation mode. Yeah. So thanks, Shafiq, and the entire team. Thanks, Hietch and Dell, for inviting us for this event. And we're glad. Before I begin my presentation, let me just briefly introduce myself and my organization. My organization is primarily an insurance industry focused Insurtech provider. And we have been into business even before the Insurtech entries as a solution provider for more than about 13 years. And myself, I look after the business globally for C2L BIZ. We are currently present in about 10 countries, and we work with leading global insurers. About 40 insurers are our customers currently. So that's a brief introduction about my company and my role. So let me just straight get into my agenda for the day. So as introduced by Shafiq, yes, the agenda today is enhancing business agility in the post-COVID era with Insurtech partnerships. So let me just focus on that. So to start with, let's take a quick stock of some of the recent news updates onto that. What is the post-COVID insurance industry environment? So looking at the updates in the environment, we all know in Malaysia, we're seeing general insurance at an overall level has had a few decline, especially in the initial days of the lockdown and the MCO period. Similar trends we see in various geographies. So it is quite natural, and there are positive green shoots that we see in every aspects. In the life segment, while the overall business is down, the shift has moved from the investment link to the ordinary life products. So there is a higher offtake of the protection products. Similar things we see in various markets. The COVID-related products, even in Malaysia, I see a good uptake for that, for those who are introducing those products. And not just COVID-related, but even life and all. And there is a huge surge in terms of these policies. So there are positive green shoots coming, and with various leaders that have been that I have been interacting. But also, first is that there have been recent survey by ISG, which was published in Asia Insurance Review, which talked to top 300 global senior executives of insurance industry. And everybody agrees that the customers now post-COVID are more hungry for digital products and services, nearly 95%. So there is no two thoughts about it. Digital transformation is going to be accelerated, no brainer, because the way the entire ecosystem and consumption of digital services is growing. So it's only going to aid the consumption in this market as well, and more so in the general insurance. Expect the customer behavior to change because of, and that is this disruption. And disruption has proven us many things. Work from home seems to be the new norm for most of the places, which nobody would have imagined to this scale of work from home operations. So it's a lot of different revelations. And for the insurance industry, one key theme is the digital will have a deeper roots in the entire industry. So what do we see as a overall analysis? The way we look at in the Porter model, that how we analyze the industry, and starting with the customer itself, let me look at what is a pattern. We all know there has been a growing pattern of the digital expectation, but the customer's behavior, which we have been seeing, which has been hopping, the customer buying behavior, which has been growing in terms of hopping. For survey, the customer will go to one site, he'd go for comparison on other, quotes on the third, and finally purchase on a physical environment as well. We've seen a pattern where he shares his experiences on social media, or even his post-sales experiences as well as a post-claims experiences. So this behavior is only accentuating with the ease with which the digital mobile, as well as the digital ecosystem usages are growing. With this, we see there is also the higher need perception, whether it talk for health products, life products, ordinary life. We see the income protection from general insurance, liability. So there are higher awareness of health, personal accidents. So all the products seem to be growing. There has been an initial lull. Talking to a lot of CXOs and CEOs of various insurance companies, what we see is that the lull is more because of the supply side issues, but not on the demand side. There is a need. And as soon as we are fixing up the lockdowns, the MCOs are getting lifted, the demand is coming back. There is other issue onto the in terms of the physical connect, which is I'll address in the later in the distribution aspect. But there are latent gaps that are also surfacing in terms of the financial inclusion, looking at the micro related, because now there is a higher awareness that the government had to support the poor more effectively. So there is a need for a higher financial inclusion, and which we see in Malaysia as well. B40 target group is being intensively looked at, and it's the same trend in various geographies, whether we talk in India, Indonesia, Philippines, and we see a significant strategic focus from the insurers towards because of the growing consumer demand for protection. There are niche segments that are also surfacing out with the niche products, whether it is because of the digital needs or the high penetration. The other important aspect is that insurance is not just looked as a risk mitigator. It is also being looked as a risk preventer. So there is a higher engagement that everybody is looking at throughout the life cycle and the life journey of the life policies. So whether it is in auto, we are talking about use of telematics to handshake, and you create more specific products to each customer. So the segment is now becoming segment of one. So every customer is expecting that the pricing should factor in his driving behavior in an auto segment, or his own health or wellness awareness behavior, whether we talk in the health products, whether with the like of Discovery, the Vitality models, or the Proof Balls model. So wearables are becoming integral in the customer behavior, and they're willing to share information, but they expect a much more segmented. So in terms of the disruption, we all know it has been talked about even in the past AICV and PwC Malaysia study that general insurance is one of the at the highest point in terms of the disruption immediately after the financial payments and transfer. So this is at a customer side, we see a huge impact. On the competition side, competition is coming from all across. It is no longer you are competing only with the other insurer. You are competing with so many new Insurtech players, and they are fighting. Whether you see there are aggregators coming, there are ecosystem players. Even in China, you look at it, the ecosystem players like the Pingan, the Zongan, or the WeSure, which is the WeChat group, who are large ecosystem players, or even at a global level, we talk about Amazon, Google, they are dabbling with and working on products. And surprising, even the players, there are new digital insurers, a breed of digital insurers coming, springing in various markets, whether we talk Singlife, whether Tune Protect, whether it is Blue in Hong Kong, whether Go Digit in India. So there are different players, and even who are really looking at technology as a niche area to really focus. And this is supplemented by a gallery of huge amount of Insurtech players who are coming with unique business model. All this is only going to add to the competition in terms of its pressure on the pricing and pressure on trying to identify niche segment. With all this, the de-tarification pressure is already there in terms of devising more competitive and more focused products for the industry. With this as a competition, let's look at more detailed insight into the distribution aspects. We know distribution, I was talking in the beginning, that there are, the physical distancing was a big challenge in the initial days. So those who were truly digital could help address. But I mean digital is not just having an app or something, but how able you are equipping your partners, your brokers, your IFAs in each of your respective industry to really be empowered, and also empowering their customers to take away the challenges of physical distancing. So many of the insurance products, especially in life and health as well, are more of a push product still, and it's still not become a pull product in various markets. So there has physical distancing has had a huge impact on the distribution. The other aspect I was talking about is the value chain is splitting. The customer ownership is changing. So every segment where the customer, whether it is the ecosystem players, whether it is the aggregators, or whether it is the niche affinity groups, everybody is coming up with offerings, whether it is a wellness player trying to come a bundle an insurance product, or whether it is Tesla trying to bundle an insurance based upon its unique capability to have safety standards and give higher discounts to the customer base. So this trend of customer ownership is going to add on to the different challenges of physical distancing. Last but not least, the Insurtechs itself are redefining. So whether they are, some places they are supplementing, but some places they are redefining the direct customer engagement with the point of sale bundling or the niche offers that they come. And all these models we have seen in Malaysia as well, the Katsana Drive Mark, Etika collaboration, Takaful Ikhlas collaboration for giving discount in the initial offer, and at the same time going ahead to give a usage-based model. WeSure are doing the same, not only working with the insurers, but they are going to the extent of understanding of the customer behavior patterns, and they are talking about their own customer. They are leveraging their customers in terms of the WeChat ecosystem and trying to come with a detailed analytics and AI modeling, arrive at offering specific to them. And for that, they are even willing to go straight to the reinsurers. So for the collaboration and come with a concept design, leveraging their own databases, using the reinsurer databases across the industry and crafting unique products for the latent demand. Similar thing we've seen for Grab Insure. So the ecosystem players are coming from all sides, whether it is payment systems, whether it is the mobility ecosystem. So we see, or there are aggregators. So all these models we are seeing. At the same time, I said micro model, the Bima model, we see successfully implemented in about 14 countries. So it is, many of these models are cross-border as well, and collaborating with the local insurer, forming a broking arm just to enter. And the brokers at times are growing bigger than the insurer itself. We see Policy Bazaar in India having a bigger cloud, and a similar thing in Pasar Polis in Indonesia and Fatberry in Malaysia. So there are different Policy Street as well. So different providers who are really getting into the distribution ecosystem and the entire value chain of who is going to be the owner of the customer, who is the manufacturer of the product, who is the provider in terms of the distribution. So everything is splitting. Even we see in Malaysia and Indonesia, the ALC model really growing significantly, even for Takaful segment. So it's a huge shift in terms of a distribution landscape. Coming back, what's happening? Let's have a look at the technology. We all know the different technologies that are penetrating, whether it is, we talk about wearables, telematics, and at a larger ecosystem, the IoT, the Internet of Things. We see the higher use cases being talked about at the industry, whether it is for AI, ML, and RPA, for underwriting decisions, quotation automations, whether it's for claim fraud analytics. And these use cases are only growing with the day by day, or even understanding the sales propensity models and evolving and crafting specific products. We see the cloud penetrating significantly as the insurtechs are riding heavily and optimizing their investments by minimizing their investments in infra and leveraging more as an expenses. Similar thing for big data, the analytics, which is a backbone again for AI ML. So big data not only purely for decision making, but in terms of automation for AI and machine learning, it is becoming a critical factor. And this decision is very critical to especially where to allocate your resources. Blockchain has been a little on a slower side, but I see an interesting models coming up with unique contracts that people are able to create, where the industry standardization still is a little bit of challenge. And digital mobility, I need not speak about it. We have been pioneers in those for across nearly 10 markets. We are leaders on the digital mobility as well, where we are leveraging all other use cases on AI, on big data and cloud as well, with huge amount of services. And with this transformation experience, we have learned a whole lot of industry use cases have been and what it takes to make it successful. With this COVID, all these use cases, what we see is only going to get refined. And the key area that we're seeing is that many of the insurers have realized that just adopting technology did not help them completely mitigate the risk of the COVID pandemic. Many of them who had so-called digital initiatives could not sustain the physical distancing, could not adapt to the omni-channel needs of the selling it through a digital face-to-face. These started suffering. The AI ML models that they were talking about could not sustain and help them sustain the business volumes in terms of in this pandemic period. So what is it that we are learning from this technology post-COVID? There are quite a few learnings, and the core to that lies in the enterprise architecture. And that is where I will be touching upon in the later part of the presentation. Finally, coming to what happens at the regulation. We all know the trend in regulation is no longer just about matter of sharing certain standard reports or filing reports with the Bank Nagara or with the IRD in India or any of the regulators. The regulators are getting very intensive in terms of the role for transparency and customer privacy or data security. And we see that all across. But the biggest change that I see in post-COVID is the active involvement of the regulators to help industry as well as to help industry get more closer to the digital ecosystem. And I see a huge amount of sandboxing initiatives being taken by the regulators, whether it is the ecosystem players triggering it, and they are open to new players crafting unique products for different segments and trying out what otherwise they would not have agreed to. So with this entire ecosystem play that we went through, what is it that we see? What is it that in this ecosystem are these the splitting value chain making the collaborations inevitable? Yes, if you look at it, many of these insurers, a survey done prior to COVID had talked about that the insurers believe that the Insurtechs, the fintechs are putting a large part of the business, 74% of the business felt that the business were at risk. While at the same time, some of them saw a huge opportunities to differentiate and craft product. So, and most of them believe that the general insurance is much more amenable and at a risk for disruption because of this insurtechs and fintechs. And this is what we exactly see in the entire landscape. Why is the collaboration a necessity? Look at the models, all the business models, whether we talk about the models for aggregator, driven by aggregators, whether it is the Policy Bazaar in India, Pasar Police, or even in Fatberry and Policy Street in Malaysia. But or the aggregators are even springing up for group related products like CareVoice, One Surety, Plum, and different models of being used. We see the product bundling models really where people are bundling insurance products with the health wellness capabilities and giving a one-stop complete wellness oriented solution, or where we talk about the engagement in the lifespan of the policy. And that is very true in all. So whether we use telematic devices, whether we use health tracker wellness, we see significant shift. With the ecosystem players, it is undoubtedly, it is not that the trend is that whether we look at WeChat, the Pingans, the Paytms, the Grab Insure, all these models, or even the global names, Google and Amazon, we see them investing in some places in the insurance, but at the same time, they are equally collaborating with the existing insurer player. So their focus is on their own business model, where the focus is on collaboration with the players who are innovative and able to give them something very unique and adapt to their own niche segments. We see another unique model that is coming is the P2P, peer-to-peer insurance, which is the new avatar of, or the new form of the mutual insurance. And it is a mutual model which is enabled very effectively with the digital technologies. Malaysia is not new to that, with the Takaful model, which is already prevalent, but they have leveraged the technology in which we see the success of Lemonade, or whether we talk about Ants in Cubao, or even water drop model that is being covered, or even we see the similar model for micro is used in by Gram Cover. And all these models are talking about the fee-based payout, but the focus is on reducing the profit mindset and working more as a member for the members and sharing the benefits of a positive claim experience with all the customers together. So technology has enabled different models and is looking, and all these models, what is common thread is that they need collaboration across the manufacturer, the provider, or the partner who is conceptualizing the product, or the ecosystem player who is having the customer base. So at the end, what is the, so the collaboration, as I see, is an inevitable output, and all those insurers who are able to fit into this ecosystem and provide a collaboration. But the critical point is, how does one collaborate? How does one bring the agility that you are the preferred partner for the new age business model? So what is it? What are the critical new models emerging? So is it sufficient that you launch products faster? Is it sufficient that you improve the operational efficiencies and be more effective on your price? Or is it sufficient to distribute, to be ready with new partners? It is not. That what is critical is that your ability to package new business model, ability to think out of the box, and that needs complete collaboration mindset. Collaboration with Insurtechs. You see the trend with the kind of investments that have sustained even in the COVID scenario. Look at the trend in the investments. While the trend, in spite of the lockdowns, the investments in the first half of 2020 has not been subdued. It has nearly covered up. In spite of the initial lockdown period, the Q2 has covered up and nearly come closer to the last year numbers. And it is very likely that it will, the kind of investments that Waterdrop got about 230 million. So the kind of investments that people are looking towards Insurtech is very critical. The other aspect that I would like everybody to also understand is the type of investments and in what areas are these Insurtechs focusing on. So where the funding is going towards. You see that the Insurtech funding is largely in the areas of insurance customer acquisition, which is the largest place, as well as the insurance operations. So the Insurtechs are enabling the core operational capabilities as well as in the core acquisition areas. And this is a very critical aspect I would like to touch upon in the later part of the presentation. So how does, based on we as a company which has been focusing on digital transformation for the last decade plus 13 odd years, we have learned a whole lot of things. Why the digital, so-called digital initiatives of many insurers could not help them sustain in this critical COVID period, which was one of the biggest tests that whether your digital implementation was successful or not. And let's look at what are the, so it is important. The key reason for this ecosystem is that onboarding, how the onboarding happens. What is it? So is it just an innovative business model, your ability to attend to the niche customer segment, or whether you are able to do the transformational thinking and execution? All these aspects are critical. While I cannot touch it in this presentation, the human or the people aspect of it, and I'm presuming you are very well equipped to that, my focus will be more on the operational and the technology aspects, which are really adding to these pointers. So what are the critical factors that we have learned and which will become more critical in the post-COVID digital ecosystem readiness? I look at it on the 4 critical aspects of an enterprise. Whether your enterprise capability to sustain a digital will depend on the 4 factors is your adaptability to new age business models, not just talking about just tying up as a partnership, but even to create a unique product offering or a conceptualize a new, like a P2P model or so. It all needs a much higher adaptability and flexibility. And you see that in terms of different business models, whether it is collaborating with the aggregators, collaborating to create new products like the way you see the Bima and Allianz, whether it is a Grab model, each of these products are not the standard, typical, the term, the PA and the whole life. So there could be different models, or whether it is collaborating at a point of sale. There would be other interoperability, the critical aspects. The second critical aspect is interoperability, because at the entire to get subtly fitting into the ecosystem, the biggest fact point is about ability to integrate with different gateways. And here, I mean not only the payment related aspects, the gateways interoperability to leverage the standards of information records, whether it is for health records, whether it is for blacklisted customers or fraud patterns that are happening in the ecosystem. And last but not least, the social media profiles, which are help you to understand the propensity models that you have learned over your customer database and juxtaposing it or overlapping it with the models that are available from the industry or the segments that are available from the social media profile. And this interoperability is very critical. So it is not about just having an AI number. Your ability to integrate with this these standards that are getting defined across the industry will be a critical aspect in the digital ecosystem readiness post-COVID. Last not but least, the most critical aspect is the packaging. The packaging to come for the, whether it is to bundle a product. Lot of this simplification that we talk about, the root of all that simplification lies in unbundling and bundling of the products. So whether to unbundle it to the smallest of the benefit or smallest of an event is a capability that I find most of the insurers grappling with in terms of the ability on the core systems, ability on their core operational processes. And this determines their ability to create hybrid products, whether it is talk about protection with investments, whether it is called for critical illness bundling or a personal accident bundling, and all of this. How you are able to create niche products for an opportunity, whether it is for diabetes, whether it is for cancer care. So, and we have seen a few of our insurance customers really leveraging this opportunity and growing significantly in the customer perception and exploiting the potential of a partner significantly. And all this, whether you package them as not just as a pure protection product, but package them with a bundled wellness practices as well as in the entire. So the customer is saying it is not that you are a risk mitigator, you are a risk preventer for them in the entire life cycle journey. Last of this, these three are the critical aspect, and the fourth of all this is the agility. And here the agility, all these three aspects that I mentioned, how able are you, how quickly are you able to, will be determined by your core capabilities, whether it is your systems, their architecture, how you standardize the things. So your configurability on things, your standardization of the integrations, not only of the integration, but how you are standardize your product and not looked at hard coding a lot of your functions. The other aspects that can add agility is your OpEx focus. Rather than trying to invest and reinvent everything on an infra side. So that also becomes a critical factor. If you can operationalize it and make it an OpEx expense and leverage on the growing bandwidth of a cloud and come leverage the SaaS offerings by the Insurtechs. A trend, an analysis of McKinsey showed that nearly 61% of them, of the insurers, are able to leverage this kind of operational capability from the Insurtechs significantly and focus on end-to-end time. Not just about configuration is one aspect, but focus on the testing automation, focus on all the aspects so that your launch time or whether to train or implementation, whether your partners, your brokers. So the end-to-end focus has been a critical aspect of the enterprise agility. And we see that in the patterns of post-COVID analysis that was done by ISG also. So people are willing to spend more money, but it is not about the technology, whether you're investing in machine learning, whether you are investing in the cloud transformation, or whether you are investing in customer experiences. What is important is that how agile are the models and how flexible or operational cost reducing or investment reducing are these in this tight market situation. And that's what we are looking at, how SaaS or a cloud really, and Yazid will be covering that in the next part of the session, how SaaS is really helping insurers be nimble, how it is helping insurers to be agile by exploiting the industry standard, exploiting the API ecosystem and microservices environment. We in fact reinvented our organization during this COVID period. From our standards 8-odd products, we have gone up to 24 flexible services as a microservices and which are available for insurers to consume and on a variable model. And last but not the least, the ownership of this. The ownership is not at the point of only implementation. The ownership is all across the entire life journey of the SaaS engagement. So that's a huge agility. You focus on the core area of your business and leave the rest of the headache to the SaaS provider who is ready with the services in the long run for more skin in the game. So coming back, yes. So these are the four aspects which are going to be critical in terms of a sustained digital readiness of an insurer, that whenever and which when we look at, we do help insurers in analyzing the digital readiness, and which COVID did test for most of the insurer. So in summary, the two key aspects I want you all to be left with is you're ready to collaborate and co-create new business model in the new value chain will be very critical. It is not about just chasing technology like an RPA, chatbots and all for the heck of it. It is about how to leverage that. You may have enough resources, but how do you use the resources in the new ecosystem is very critical. And that's where I come to the second point. The final point is to transform the core and truly build a resilient digital architecture, which is ready for the collaborative business model. And that collaborative model is unique to your strategy. So you not just use technology, create an optimal architecture which is truly aligned to your strategy. So that's it from me. Thanks, and hope you enjoyed my perspective on the post-COVID impact and the way forward for the insurers. Thank you.
Awesome, awesome stuff. Thank you so much, Mr. Vaitla.
Yes. Thank you, Shafiq. Thank you.
Thank you. Once again, thank you. And up next, we will turn the time over to our next presenter, Mr. Ahmad Yazim Yahya. He is the Business Director of Cloud Services for Hietch Padu Berhad. Mr. Ahmad Yazim, I hope you're ready, and over to you.
Thank you, Shafiq. Let me share my screen. Morning, everyone. Thank you for attending this webinar. I think on behalf of Dell, Hietch, as well as C2L, we really appreciate your time taking to attend this event. And so I'll be covering from the technology perspective, more from a cloud infrastructure perspective, in terms of how accelerating innovation for the new normal. A brief intro about Hietch. I think probably some of you are probably customers of Hietch. Hietch is a system integrator company. We have grown from doing projects based on SI and become managed services company. So we do outsourcing as well as managed services from the infra perspective, as well as applications, certain applications that we built. And from there, we have launched our own cloud environment in 2011. And now we are one of the service providers for cloud service providers. So if you can see on your right hand screen, we've been Frost & Sullivan won the Best Practice Award in 2019 for managed infrastructure and as well as managed security. And we continue winning the managed security in 2020. And Alhamdulillah, for 2020, we also managed to win the award for cloud infrastructure services in terms of competitive strategy innovation. Okay, so I think Mangesh has already covered some part in terms of how COVID-19 changes our life. And whether you like it or not, I think COVID-19 has caused us to change the way that we live today and how we do business today. And in fact, many have said that COVID-19 has become the catalyst to the digital transformation era. Digital transformation has been there since 2012. It was first coined in 2012. And I think the progress of digital transformation was pretty stable, but the event of COVID-19 itself, I think, is somewhat accelerated the digital transformation business. Okay, so we are adapting. I don't think we can go back to the old normal, even despite getting the vaccine. Just look at how we're doing this business communication today using webinar tools and the way that we purchase stuff on e-commerce. This has now become the new norm in our daily business. And digital transformation is going to require the evolution of humanity, and the enabler of this evolution is technology. So let's quickly look at how technology has evolved from the past until today. So in terms of overall IT evolution, so you can see these are some of the areas in terms of how IT has evolved. From the development process, people looking at the waterfall during the legacy period, change to agile, and now people are looking at DevOps, for example, from the development environment. Same goes application architecture, from monolithic to n-tier. Now people are looking at microservices. In terms of deployment packaging, from physical to virtual to containers. And last but not least, application infrastructure. From client server, people are now looking at data center, hosted environment, and cloud as one of the prevailing infrastructure technology. So digital transformation is the new normal. The acronym for digital transformation, many termed it as DX. It's one of the IT buzzword in today. And it covers a wide range in terms of customer experience, operational efficiency, culture, leadership, workforce enablement, and digital technology integration. And with this digital transformation, companies, businesses, they are looking for greater speed, agility, and faster time to market. And all this while also looking at how to reduce the cost and meeting the user needs for access to applications and data anytime, anywhere. And you've seen how companies, startups like Grab, Airbnb, and Netflix, and so on, how they disrupt the market with their digital transformation business. And we'll see this more and more as we go along this COVID-19 phase. So it does seem like organizations, companies, businesses, we do not have much choice but to also transform ourselves digitally. And this can be done, I think it depends on your budget, it depends on your current IT infrastructure, it depends on your current business or organization culture. This will impact in terms of how you want to transform yourselves, whether to do it in a specific niche way or you go into a big bang way. So the next area is all about transformation. So companies, they're looking at how to create smarter applications and services. They're looking at how to harness the data that they have, the customer's data, and to look at how to gain new insights of this data and how to reach to the customers to make sure that the customer stays with them. Also, at the same time, they're looking at how to optimize the infrastructure. And when we're talking about infrastructure in terms of this digital era, most of them are looking at cloud options, whether it's private cloud or public cloud. So in terms of landscape of digital initiatives, in terms of how customers and businesses reach to the customers and the focus on the customers, these are the three key areas that normally they look at. One is to enhance their customer experience. Second, to improve their management decision so that they can act quickly, so that the customer still stays with them, or for new customers to be able to be part of their new customer on board, and how they can innovate products, processes, and services. And you can do this via the tools enabled that you have, such as AI, analytics, IoT, mobile, and cloud. So what I'm going to touch more a little bit here for this session will be on the cloud technology itself. Okay, so cloud computing, it refers basically to having a virtualized hardware infrastructure. So we're talking about the server, the storage, the network switches, the firewall, the internet connectivity. So all this being managed by a service provider, and it provides to you as a service based on what you use. So it's basically an OpEx model. So you pay for what you use in terms of the infrastructure service. Okay, from cloud computing, basically the common characteristics of cloud computing are those 5 elements, which is on-demand self-service, resource pooling, broad network access, ensuring the network accessibility from everywhere. I think in Malaysia case, we are moving towards 5G. We are not there yet. But in terms of 4G, I think we are good enough in terms of network connectivity, especially in not the so rural areas. With cloud computing, there's also elasticity in terms of how you want to scale up and scale down based on your requirements. And measured services, basically the usage that you use in cloud computing infrastructure. You can basically have a meter in terms of measuring how much you use, and that translates to how much you're going to pay to the cloud service provider. One aspect also in terms of key benefits of cloud computing is reducing costs. Reducing costs from the perspective of there's no capex purchase of hardware upfront. So you don't have to pay upfront one lump sum in terms of hardware purchase. In terms of manpower to manage the cloud computing, you leave it to the cloud service provider to do it. So in that sense, you can reduce your IT resource in terms of from managing the infra part. And also there are some other intangible reduction in costs. Yeah. In terms of the data center management itself, the power, electricity that you have to pay, the aircon costs and whatnot. So these are some of the reduction in terms of cost when you go for cloud computing infrastructure. And there are some who has gone further and prefer more software as a service. Not all application can be categorized as software as a service. C2L is one of them. Yeah. So when you engage and subscribe software as a service, so it's basically it's a service that combines the software as well as the infrastructure as well as the services portion all in one. So as far as you're concerned, you just it's just like Office 365. You subscribe to the Office 365 and immediately can use it. So it's a similar concept like that. So from this perspective, if you choose, for example, to engage SaaS with C2L as well as Hietch, so basically the SaaS model will be hosted in our data center. And as far as from your side, basically you just subscribe to the service and you can immediately make full use of it. Platform as a service is more of clients, customers who are looking at to develop their own applications and use the technology that's available on cloud. And also using platform as a service, once you have that available, then you can also have other kind of cloud, for example, the hybrid cloud as well as multi-cloud. This is just to give you an overview in terms of this typical services offering when a cloud service provider provides the service to you. Basically, everything is as a service, from infrastructure to backup to DRs as a service, platform as a service, security as a service, software as a service. So backup as a service and DR as a service, those are basically an extension of the infrastructure as a service. It's basically to ensure that your data is protected and to ensure that you always have a copy of your data in any case or in any event that happens that cause your system to go down. So you will always have a recovery mode from the backup or from the DR side. We have our basic security as a service, which goes from the firewall as well as IP access, as well as at the level of segmentation of the VMs. But some customers who prefer to have more stringent security, so they can opt for additional security protection from the security operation center perspective or vulnerability assessment perspective. In terms of cloud model, you have, for example, a private cloud and public cloud. Private cloud, from our perspective, it can be two models, for example. It can be at your premise itself, or it can be off premise at our data center, for example. Yeah. So if it is at your premise, we provide to you as a service. That means the hardware, the software, we provide to you, and we manage it for you as an OpEx model. So similarly, off-premise, if all the infrastructure is at our data center, and we provide to you a private cloud as a service to you. Hybrid cloud is something that we are moving towards now. Basically, hybrid cloud is basically having an extension of workloads also at public cloud as well as private cloud. So you could have, for example, a situation whereby you have your critical applications running at the private cloud, and you could, for example, engage a CRM application at public cloud, and these two are integrated and form the hybrid cloud. Okay, these are from IDC, basically looking at the cloud adoptions. So I've explained about the cloud, the basic cloud, which is using IaaS, SaaS, BaaS, and DRaaS. Hybrid cloud is basically having the same application running both at the private cloud as well as public cloud. And multi-cloud is something that you have workloads running at multiple public clouds. So you could have, for example, certain application running at Amazon, some other application running at Microsoft Azure, and your critical data, for example, you put it at the private cloud, for example. This is interesting slide whereby it was actually from Harvard Business Review in 2017. And this slide, basically, they predicted that by 2020, over 90% of enterprise will use multiple cloud services and platforms. And by 2020, also 42% of enterprise workloads running on hybrid cloud. I think from the prediction perspective, I think they are a bit way off since this is 2020. In the Western countries, I think it's slowly picking up in terms of multi-cloud. Hybrid cloud, I think they are starting to garner the interest and going on board. But for Malaysia, I think it's still way back. I think we are about 3-4 years back compared to the Western environment in terms of cloud environment. The bigger organizations, I think they are starting to move to hybrid cloud, but multi-cloud, I think, is still far way off in terms of Malaysia landscape itself. This is another interesting slide to indicate, I mean, we've heard the hype in terms of public cloud, but this slide, which is from Gartner itself, basically it says that from 3.8 million of IT spending in 2018, recorded in 2019, out of that, only 206.2 billion of IT spending is on public cloud. That is only 5% of the total IT spending. This means actually 95% of the total IT spending is actually still on traditional IT as well as private cloud. In terms of the revenue growth for public cloud, yes, it's increasing, but it's not as what you hear in terms of how they report it inside the media. Yeah, this is coming from Gartner itself, so it should be true. Yeah, and we see now there is a trend whereby people are slowly looking at public cloud. You see from this slide, for example, there are many businesses who deploy workloads into the public cloud. They went off and with the hype and go on public cloud, and later on they found out that not all workloads is applicable for and ideal for public cloud. So certain confidential data, certain workloads that needs very high processing, certain workloads that you want to make sure that you manage it yourselves rather than put it on public cloud. Those are the kind of workloads that's best to keep on private cloud rather than public cloud. So you see from these statistics, the word they call it repatriation, which is migration from public cloud to private cloud. And initially, many customers find out that when they move to public cloud, they find it very difficult to migrate it back to the private cloud. There are tools and software now available that enables that migration, but this is still something that is being looked at seriously at this point in time. The other key areas is the security, for example. In terms of security, many customers feel that it's better that it stays in local residency rather than put it on public cloud, because once you go on public cloud, sometimes you don't even know where the data resides actually. Okay, there was a survey that was done in terms of whether your organization has migrated any applications or data from public cloud, and about 40% of the surveyors mentioned that yes, they are looking to move back from public cloud to private cloud. And the top drivers in terms of why they feel that they want to move it back to private cloud is basically security is one of it. So in essence, when we study in terms of the migration from public to private cloud, we see there are 5 key elements that that becomes the key factors why people want to move from public cloud to private cloud. One is the control, security, and compliance. As you know, I think in Malaysia, data residency is one of the key areas in terms of to ensure that they have the control and the compliance in terms of they manage the data itself. Secondly, you have, for example, data gravity, yeah, the ease of moving data. So now with the tools and software that you have, you're able to move the data from public cloud to a private cloud. In the earlier days, it wasn't that easy to move. Storage technology now is much affordable. I mean, those days when we started off with disks, you know, we are talking about kilobytes and megabytes. Now, people are already talking about petabytes and exabytes of data. Network latency, as I said before, the coming of 5G and currently even our 4G, I think our network bandwidth is pretty good in Malaysia. On-premise DC, you see more and more cloud service providers in Malaysia, and they are already providing, even the traditional DC players, they're already providing cloud-ready services in the market. And last but not least, the coming of the hybrid cloud, where people have a choice to place which application, which data resides in private cloud and which resides in public cloud. So this ability to have the choice to have this makes it more appealing to them to have some portion of public and as well as private cloud. So when we talk about data, data is the most precious thing at this point in time. No, it's no longer oil. You see from the elements of how data is being manipulated and how it's affecting business, for example, from ransomware perspective and things like that. And when we talk about data protection, what we are really talking about is data recovery. So this goes hand in hand in terms of data protection and data recovery. You need to have your data protected, and to make sure your data, when you try to restore it, it is workable. There's no point in storing the data, but you restore it and you can't restore it. And when you do data protection, there are elements like such natural disasters like hurricane, flood, fire, earthquake, which is out of your control. And by having such possibility, normally people would make sure that their data is protected, not just at one site, but at multiple sites. Because having data not being able to recover it, you're open to possibility of getting falsehoods as well as your image in terms of your company to the public. So normally when we talk about backup, we're talking about the 3-to-1 rule, which is to keep 3 copies of the files at one point in time. So normally you keep 1 copy at your production, at your server, yeah? And we recommend that you also have a backup copy, which is you store it on the storage at the same premise, so that when something happens at the server level, which you can restore from your backup repository, you can do it very fast and with minimal downtime. And the third copy, normally what we recommend is to have 1 other copy at another safe site, which is your disaster recovery site. So anything happens that at your production or your primary data center, you can always fail over back to your DR site to ensure that your business keeps on running. So the backup process, normally what we do, we back up the operating system, system software, application codes, and system application all in one. And this backup is encrypted, so it is secure. And normally when you do backup, so it depends on the retention period as well as the frequency. So this will determine in terms of how big your backup copy is. So the longer your, the more frequent you do backup and the longer your retention period, then the size of your backup data will be going much more. Okay, so in terms of DR as a service, so like I said, it's actually the replication of whatever that you have at the primary site. You replicate it over to the DR site, and normally doing a DR as a service, just like the traditional DR, it depends on the customer's requirement in terms of what is your acceptable downtime. And this translates to basically to the service level agreement that you have between yourself as well as the service provider involved. Okay, and the good thing about having a cloud infrastructure for DRAs is that, again, it's based on OPEX. So everything is based on pay-per-use basis. When we talk about cloud, we won't be able to run away from security. So normally, as the basic security is the firewall and the switches. For ourselves, basically, we also have security modules that we implement within our cloud, which involves DDoS protection, anti-malware, web reputation, firewall, and so on. And to some customers, they require a higher level of security. So for these kinds of enhancements, we normally offer them additional services like vulnerability assessment. Vulnerability assessment means we try to poke or hack your environment and see where are the vulnerabilities involved. And based on that, then we come up with a report in terms of how we're going to ensure your environment is secure. The other one is a security operations center. Basically, we have our own security operations center in our data center. And this basically manages in terms of the kind of antivirus out there, malware that is circulating outside, trying to hack into our systems. So this SOC will form the level of defense in terms of managing those threats. Okay, so my last slide basically is in terms of looking at when you want to choose a cloud service provider. I believe these are some of the key criteria that you can look at from data residency standpoint, from ensuring that the data center that you engage with has at least an ISO certified data center facilities. It's not just a client who provides a server room and manage it for you. So when it's cloud, then you have agility in terms of scaling up, scaling down. The cloud environment has to be high available. There's no single point of failure from the storage, network, or compute resource standpoint. So from Hietech perspective, these are some of the key criteria, especially, for example, certified personnel. We have certified personnel that manages the cloud environment. And for certain cloud service provider, what they provide to you, even public cloud for that matter, what they provide to you basically is just infrastructure as a service. And you yourself either have to manage that environment yourself, or you have to hire a third party to manage it on public cloud. So in our case, because it resides at our own cloud, so basically we manage it for you. And when you have, for example, DR as a service, we also help you in terms of the DR coordination, doing the DR test, during the actual DR, we'll be there for you to assist you all the time. And we have basically more than 25 years of experience in terms of managed services. These are another key criteria that you should look at when you want to choose a cloud service provider. And the good part about also the cloud model, we have the model whereby you can have on-premise at your own premise, virtual private data center, or off-premise at our data center. Or you can have, and you can choose, for example, hybrid cloud. So there are some environments at the private cloud and some elements at public cloud. Okay, so with that, I end my presentation. I hope you enjoy the session, and we welcome any Q&A from the floor. Shafiq, back to you.
Brilliant, brilliant stuff. Thank you so much, Mr. Ahmad Yazim. We will go ahead and take some time for questions now. Just a quick reminder, please be sure to type your questions into the question box in your control panel. Looks like we have a question, and I do believe that Mr. Vaitla has answered quite thoroughly on the question. So I would like to have Mr. Vaitla once again to quickly share a recap on the questions, which one of the attendees would like to know from your professional experience during this unprecedented time, the unique offering that has been offered throughout this challenging times. Suppose a higher self-service is or has been accelerated during this period. So I would like to welcome Mr. Vaitla to give his quick feedback on the questions. Over to you, Mr. Vaitla.
Thank you, Shafiq. Thanks for this question. While I don't know the name of the individual, but thank you. It's a very interesting question. The biggest of all the challenge that most insurers were facing in the initial days of the pandemic was absolute no physical contact, and that was where it was a true test of an insurer's ability in terms of its omni-channel capability. While many insurers have talked about their omni-channel but the siloed nature of the way the insurers had created the system, they were state of the art in each of the segments, state of the art on mobility, state of the art on buy online, state of the art on other direct in the branch setup. But in this digital period, the biggest, what you rightly asked, higher self-service, which is a very important pertinent point, which was needed by the customer to do and engage. And insurers resorted to quick fix. Some of them were going for a quick fix, like just a screen sharing, like using the Zoom app and all. But that hardly needed anything from the insurer. Or somebody tried to just include a digital signature to complete the e-application or to help the salesperson, the agent, the advisor, the broker to do the sale. But this challenge was a simple physical put to test by the physical distancing. And many insurers were grappling with various alternatives. Some people tried screen sharing with a co-browsing option, and co-browsing technologies were floating. But the co-browsing technologies again came with its own baggage of they were more suited for customer service call center where a customer could trigger it. And most of the co-browsing solutions also were not fitting in. People wanted to include video chats along that, but it was not compliant to the regulatory needs as well. So there were, insurers were addressing one issue at a time, but they were finding that they were landing up with because the regulators were uncomfortable with the co-browsing or the screen sharing at times because it was getting the customer was feeling it uncomfortable. Somebody peeping on the top on his shoulder, what is feeling, where is feeling, his confidential screens are being seen. the restrictions were not there. So if certain restricted documents were being shared with the agent to update on the before buying a policy or before filing a claim. So those regulators were uncomfortable, and finally those who had a true omni-channel capability, like we had our capability on a collaborate model, which were adopted by some of our customers very readily. I can't name them, but yeah, they were really able to seamlessly handshake the same application from their agents, native or hybrid or offline devices, to the customers by online engagement, and do it, not forget about, it doesn't need a laptop, he could do it on his phone, sign on his device, add his own document and complete the sale. So it was a complete seamless omni-channel, a true omni-channel test for most insurers as a higher for involving the higher self-service. Leave apart other innovations on product offerings, coming with a very granular products, because most of the people were used to pure term product or medical or complex medical or products. But here it needed very purely those areas of coverages which were not covered, and it was keeping it short term, the risk of loss of jobs and all. So some were able to package a combination under the COVID risk and create a 360-degree offering for addressing all those, not only on the medical side, but on the income loss and all. And it was really very innovative and could do that very well. Purely addressing to the point that ability to unbundle and bundle them products together to offer to the customer. So that was something. There are many other cases, but I'm just touching even to empower on underwriting seamless, not just a typical STP underwriting, but how to reduce the back and forth, because there are very reduced staff at the operation level, and you wanted to provide more and more decisions on the field. So there was a huge amount of field underwriting capability. So, and that was very unique, and that was really able to transform from the conventional underwriting workbench-based decisions. So these were a few of them I can think of.
All right, thank you for your feedback, for the answer, Mr. Vaitla. Over to Mr. Ahmad Yazim. From your professional experience, the unique offering that has been offered during this challenging time in terms of managed cloud services. Would you like to share a bit of your views on that? Over to you.
Sorry, Shafiq, can you repeat the question?
Oh, certainly. The unique offering that has been offered during this COVID-19 situation at the moment in terms of the managed services offerings from Hietch Padu. Suppose the higher self-service has been or is currently accelerated during this time.
Okay, basically what we've seen so far in terms of a trend, once coming into the COVID-19, yes, there is a slightly higher demand in terms of cloud services. In terms of, if you're talking about higher self-service accelerated, from cloud perspective, basically it depends on the kind of SLA that you require. Different customers have different SLAs, so from that requirement perspective, we provide the SLA as per what your requirement is. We can have, in terms of, for example, if you're the kind of customer that you want the SLA to be, the downtime is very, very low. So the infrastructure that we develop for you will need to cater to that requirement. So whether it's COVID-19 or not COVID-19, this has been always our practice in terms of cloud services provisioning to the customers.
Thank you. We have another question. How to utilize artificial intelligence and machine learning to enable straight-through underwriting processing?
Yeah, this is a very pertinent question. We see a huge amount of fad these days purely on AI/ML, but in terms of underwriting decisions. And AI/ML is truly exceptional in terms of its capabilities, that it can churn out a huge amount of patterns in the decision making of underwriting rules. But what we need to understand, the caveat that I have is that it needs a huge amount of data. And that is something which is lacking in, and that holds the insurers in leveraging this capability significantly in the STP area. In a straight-through underwriting, cases are still very standard. I don't see an straight-through needing a huge amount of AI/ML. The real use of AI/ML is in the exception cases, which you're not taught. So exception cases, because straight through, the moment you say straight through, it is standard case. It is not a substandard case. So it is not, doesn't verify your, when you're talking about a standard case, it is a standard medical scenario. It is a standard financial underwriting. It is a standard lifestyle. So you have pre-verified it, and then you are giving up the standard decisions. So it is not an expert analysis. My view is that a true AI/ML leverage in underwriting is a hybrid and a mixed model, where you leverage the STP decisions with a standard STP questions based on the expert underwriting scenarios that you're taught. But again, it is not a fixed one. Then add on with the top of it based upon the expert underwriting decisions that you envisage. And here I mean by, because intelligence, please understand that it's of two parts. One is a data-based intelligence and the expert rule-based intelligence. A true optimization is use the expert rule-based decision and bring the STP cases, which are typically 40, 50, 60% to 70, 80, 90%. On that 80, 90%, then you leverage the expert data based on the data patterns and keep secondary refinements of cases and give the fine tuning of that. Of the underwriting decision, and that will be a true good leverage of AI and ML onto that. Yes, at the same time, I would also like a good AI and ML is where you find the patterns of decisions over a period done by your underwriters, or whether it is for a 3 months, 6 months, on to a particular diabetes cases, particular heart cases, and based on that pattern, you can feedback the information in improving your underwriting decisions. And this is a very critical application. But first is the base has to be a huge amount of data. The analytics have to be really strong. And third is your ability of your underwriting engine to use those data elements in an automated form. Because many times whatever people find out, the patterns are very unique and they don't have the configurability in their own underwriting engine to give those unique patterns that the data analytics has learned. And that's where they get stuck. And that automation of an AI/ML is not really as seamless, because they are the insurers are stopped by the limitations of the underwriting or limitations of their operational systems. And that's where I come with this mixed model, where leverage the expert underwriting up to a point, and on the top of it, refinements and feedbacks can be very well leveraged. So the use cases of AI and ML have found to be much better in those scenarios.
All right, thank you for that. And perhaps this would be the last question for the session. I believe this is more relevant to Mr. Vaitla. What are the skills that our new workforce for insurance industry needs in lieu of the post-COVID situation?
See, post the new workforce, basically the critical point in any digital world is that everybody has to keep on learning, unlearning, and learning the new way. The best example is that we all learned work from home. And I'm here talking about the masses, not, there were always people doing work from home, a very small segment, but the way we are learning. Now, the biggest is that the work from home pattern in terms of a new workforce is one of the critical thing, and the human capability and the human resilience was very well tested and proven. And the same thing, I see that the organization will get transformed in the departments will get realigned with the digital context that I presented in my session. In that digital context, the organization, the operational roles and efficiency for those who want to survive will keep on reducing for the automation in underwriting, automation in claims, automation in operational processes where you have hordes of people today currently doing the manual verifications, currently seeking documents, processing it from branch to the central office. All this will vanish with the model that has been tested where people are able to work from home. Why not they are able to do it remotely? So in that context, the organizational team will get redeployed for more better value-added roles in the world of AI, ML, and analytics. And these value-added roles will be in terms of better, exceptional decision-making. And that's where both the organization, both the individuals will have to come with a more better preparatory activities on training and retraining. So every time there will be a new learning, new patterns will emerge, and then you may get, so mentally being open to redeploy yourself into an alternative role will be critical. I'm not so worried on the insurance industry has been the base of the data scientists or the data analytics industry. It is not new for the insurance industry because the actuaries are the first data scientists of the world, and the industry should be the most knowledgeable in terms of how data science works. So it is only that expanding that data science model, not only restricted to the actuaries, but even to the underwriters, even to leverage with the tools and capabilities of AI ML, which are finding patterns and encouraging more people to work onto that, because the operational and manual verification and all is going to go down significantly. The use of OCRs, the use of video verification, video-based verification, the use of third-party information gateways and database will reduce those current larger pool of resources, and insurers will want to streamline themselves into more leaner organizations to combat the onslaught of ecosystem players and aggregators or the niche nimble digital players. So those will be the skills of unlearning and learning from the operational roles to more decision-based roles, which are supported by the system, will be very critical. You can't completely be dependent on the automation, because their automation is more like a feedback loop and learning. So that is going to remain, but people will have to redeploy in those automation roles.
Okay, thank you so much. And maybe one last question to Mr. Ahmad Yazim.
Yes.
It is from Mr. AK Low. He would like to know in regards to the hybrid cloud for private and public cloud. What about hybrid for on-prem and off-prem for the cases that has data that must remain on premises for regulatory compliance?
Thanks, Shafiq. Okay, for the question from Mr. AK Low, on hybrid cloud, basically it's a combination of private cloud as well as public cloud. You want to, as much as possible, if you need to, leverage on the strength of public cloud because of the vast compute resource availability, the AI machine learning software that is already available there. So those parts, those software, you can take advantage of it and put it on public cloud. Yes, I agree, for certain confidential data, certain application, core applications that you want to take control of it, you want to manage it, you want to ensure that it's secured, those should be at the private cloud. So for the, I don't recommend, for example, just putting a database at the private cloud and the application at the public cloud, because by doing that, there's a possibility of network latency in between. So it's best that whatever the critical applications that you think that needs to be regulatory compliant and whatnot, you can put that at the private cloud, and the non-critical applications, you can put it on public cloud. And these two needs to be integrated. So you need to have a software hypervisor level, orchestration level that communicates between the private cloud as well as public cloud. So in that way, you can comply to the requirement that you mentioned, where you want data as well as application on-premise, let it remain on-premise. Whatever that's not that critical. For example, I gave an example, for example, the CRM application, you can use it on public cloud, for example, because whatever data, the confidential data will still remain at the local residency level. I hope that answers your question.
Okay, great. Thank you so much for your answer, Mr. Ahmad Yazim. We have now arrived at the end of today's program. We would love to hear your feedback. And as you can see on the screen right now, we welcome you to scan the QR code using your smart devices or your smartphone for a quick questionnaire. Feel free to flip your phone and scan the QR code and let us know. We would like to hear your feedback. We hope you will find this webinar useful. And again, we would like to thank you. We would like to thank everyone for taking time to attend today's webinar. We appreciate you being here today and hope to see you again next time. And to Mr. Vaitla and Mr. Ahmad Yazim, thank you so much for sharing your insights, and we'll hope to speak to you again soon.
Thank you. Thanks, Shafiq. Thanks, Azim. Thanks, everybody. Thanks, Dell and Hietch. Yeah.
Thank you so much. And to everyone, have a good day ahead.